Hi everyone, Nick Shaheen here looking at gold. If you remember a few months ago, I shorted gold with conviction. I said that the bulls for gold on its incredible run up, gold, silver, etc., was they were and bonds, TLT for that matter, they were too comfortable long gold. And sure enough, everybody was on one side of the bus. It starts leaning that way, and then since then it has had quite a bit of correction, and now it's going into an actionable zone. So this is a short period of time, 2-hour chart, meaning every bar is 2 hours. And you can see today, 11:26, there was a good rejection of a bottom, which was close to a good rejection twice before recently. So maybe they're trying to put a bottom there. So a few points about it. I don't want to anticipate anything. Usually I don't like to do that unless I'm selling risk. So what if I sell risk below what the worst case scenario would be for gold from here? Meaning I would sell a put spread below the proven support. What is proven support? For the last three, it's this zone right here. So this green line should hold. And notice that this white zone is pretty close to this one. And this would have been my eyeball target from some sort of a dip. And albeit not scientific, I like the coincidences. I'm going to zoom out to see if there's also more intelligence that we can pick up from the daily chart, maybe even from the weekly chart. So on the bottom is the statement is that there's support, proven support, 3 emphatic candles. More visible in silver, by the way, in SLV, but I don't like to trade silver. It's harder. The ETF is kind of weird. So conversely, I can say that there's proven resistance at 139. So if somebody wants to play the range and say, okay, I want to sell an iron condor outside of this and outside of that, I can't blame them for it. Or if somebody says, if I wanted to chase gold, I would chase it on the breakout from here for a swing. If I'm trading intraday, I'll probably get more granular and try to beat it on top of this. This was a rejected candle. So see, now on a 15-minute, was that 15 or 5? Anyway, 5-minute candle, I can clearly see that there is a line in the sand on the short term, 137.8. In fact, I'm going to put a reminder, just an alert above that. So markets are open. Sorry, chat room was busy. This was a ledge up until recently. Yesterday, they were trying to hold it, and then they fell through it, and now they're coming up into it. It's resistance. Keep in mind, this is a 5-minute time frame, so every candle is 5 minutes here. So if we go to 15 minutes, sorry, this was 15. I don't know why I showed. Oh, okay, there was something in the way. So 30 minutes, about the same information, except to say that this was also, see, that's the orange line I just drew, a pivotal point from before. So I like that. So I wouldn't start chasing long until they prove that they can go above it, versus selling below and not needing a rally to win. All right, what if I go to a daily chart? Can I get some more information? Sure. So now we see that range. That's that orange line I just drew. The 2 green lines here and here I drew a while back. And here's another thing. So this was important on the way up. So I'm going to extend it. Is 250 enough? Probably not. Okay, close enough, actually. It's in the way. So I'll go out. So I merely extended something that was interesting to me before, and look where we're at inside it. Probably because of this candle right there. I don't know if you can see it. So let's extend it. All right, where is it? This candle right here. This very candle right there. See the top of it and the bottom of it almost skirts the whole green area, and it's a doji. This is a daily candle. It's a full day, meaning that they tried to rally that day. They tried to sell it, and then they decided that they didn't know which way to go. They closed it about where it opened. So indecisive. So it's a pivotal zone. Look at this. Not a coincidence. It's not a coincidence. So it's an important level. So it's not going to be butter on the way up, but I'll watch it. So how would I chase gold up? Instead of chasing it up, I would sell risk below it. I would have to find a time frame that suits my my schedule. Let's say I'm going to see the family this week and maybe early next week. I don't want to sell this week's. Then I'll have to watch the market. So instead, I would go out to next week or the week thereafter. Depends on my time frame and the distance. Ideally, I want to be here. I definitely want to hide behind this line. I don't know what kind of premium is available. I haven't done that. I'll do that and share it with members. So it all depends on what I'm doing. I don't like to sell naked puts in ETFs. Definitely no naked calls because we don't know what the heck is going on. You remember the SVIXY, whatever the hell happened last year and people blew up? Not interested. I would be selling puts in particular stocks if I know the stock because I know that there's a mathematical bottom to it, whereas the ETF is kind of a black box. So I don't want to do that. So the point on gold is it's inside of a range, inside of which I have another range, which is the green box that I just extended, inside of which I have lines on the 15-minute charts that are important. So I have actionable lines. So that's how I would trade gold. I wouldn't just say, oh, look, gold looks green, looks like it's going to do this, so I'll take it. I need actual lines to chase. There were other breakouts that didn't happen. I shared some videos before that were very prophetic not because I'm a genius, because markets look at prior history and act accordingly. So machines are trading, machines look at, hey, what happened last time we were here? They see this. Okay, so they repeat until something happens and they go above it. So ideally, if you want things to happen, if you're bullish and you buy calls or buy the GLD itself, what happens is they come to it. Let's say they fail the first time. They overcome it at some point. They come back to it and touch it as forward support. So that's how they happen, breakouts. That's why they tell you, oh, now it's an inverse cup and handle, or if it's a cup and handle or an inverse head and shoulders, depends where you draw the neckline. Just because they came to a neckline, they failed, they came to it again, they failed, and finally they got over it and broke through. And usually that means the bears are tired, the sellers are tired, and the buyers will overwhelm the sellers by X amount. And usually, if this breakout happened, where do I start booking? Somewhere around here, or I can anticipate resistance here for sure. All right, so Nick signing out. If you had any questions, you know where to reach me.